Afternoon all. How are we all doing? Sorry, I'm late today. I was completely engrossed in research. I looked at the clock and I was like, it's 16 minutes past. I've been doing a load of fundamental analysis all morning this morning, so my eyes burnt. Yeah, so been doing. Basically, I've put every fundamental news release since 2011 into a spreadsheet so that I can plot and analyze data compared to chart movement and all sorts of stuff. So it's been one of those mornings where your eyeballs are staring at the screen so much you just get sucked in. Anyway, afternoon, Church, Crum, Callum, Gregors, Met, Neo, Virginia, Ismet, how we doing? Tralala, fell asleep? No, I didn't. I was in a daze, but I wasn't falling asleep. RSI panel is boring today. Yeah, RSI panel is wrong one. RSI panel, what's that doing there? Should be over there. What? Yeah, RSI panel is boring. ADR panel is boring. Why have I got two ADR panels? Stuff's in the wrong place. There we go. ADR, RSI. Yeah, nothing much happening today. I'm a little quiet. Pass. They updated the microphone software overnight. So yeah, quite possibly. Mic sounds weird. Quite possibly. Nothing much I can do about that. I'll turn it up a bit. Don't know if that'll help. I hate it when they update things. They update stuff and then stuff doesn't work. And you're like, why did you do that? So I'll turn the mic up. Yeah, I'm not in. Let me turn it up a bit more. There we go. Is that better? I'm peaking in the yellow now rather than in the red. I can't do anything about it now because it's just gone live. Right. Anyway, afternoon. So going to have a look at dashboards. Not a lot today. And news. See where everything is. We did a full analysis of all the FX pairs yesterday, but obviously we're kind of looking at the fallout at the moment. Why has that not got the props? I've been mucking about my charts today. Let me just save that template again. Been mucking about my charts today. I've decided to remove the moving averages shadow, the moving average shadow for my 4-hour charts, just to clear everything up a little bit. So MA still shows on the daily, but not on the 4-hour, because I wanted to see propulsion gaps a little clearer on the 4-hour time frame, and it's difficult when you've got the moving average shadow on there as well. So I've removed that from the charts. So I've been playing around with my charts, which is why everything was in the wrong place. But anyway, so the market opens in 7 minutes. I didn't take any trades on the DAX or the FTSE this morning. Quite glad I didn't, because it didn't move. So we've had very little movement since the open today. As you can see, the FTSE is totally sideways. A little bit of upward movement on the DAX, but very, very little. So there's just nothing happening today at the moment. So we've had 260. So we've had about 3/4 of an ADR in movement, but it's been very grindy and very gradual. I don't even know where the open was because I wasn't watching it and paying attention this morning. It was there. So your break today was short, it looks like, which would have been there. You got 87 out of it. It's about 30. So it probably did about a 2-hour drop roughly, and then just went into accumulation all day. The DAX clean break of 52, and the opening range was 20. So 2.5. So you got roughly 2 to 2.5 hour breaks. Nice and clean today by the looks of things on the DAX and the FTSE. Very nice. So we'll have a look at the indices, trade the indices at the open. Big round number on the chart there. So so far today, the market's been fairly quiet until the unemployment claims came out, and the unemployment claims, we've had a bit of a rally off the back of those. So market, you can see there, that's the that gap there is the breakup on the unemployment claims, which we'll look at in a minute. So a little bit of a breakup. We're still well within ADR on all the instruments as well today, so plenty of room to move. So today's news, unemployment rates. We're on Thursday, aren't we? Sorry, that was yesterday. We've had the unemployment claims this afternoon. 130 came out at 233 on a forecast of 241. Previous was 250, so very, very little change. 10k on unemployment claims is nothing much at all. So although that is showing as green, not really any difference. So that's it for news today. We've had the New Zealand unemployment inflation expectations came out. That didn't really move the market at all either. Bullock spoke overnight, just reiterated what was said in the rate statement from Tuesday. So again, there's just no news today. We had no news yesterday, no news today. Market's totally flat, as you can see. We'll have a look at the ADRs and RSIs in a minute, but there's nothing moving. So tomorrow we've got the unemployment rate for the Canadian dollar. That is forecast to go up again. So more bearish weakness potentially coming in the CAD tomorrow. But for today, that's it. So as you can see, we've had some, let's look at the hourly charts. We've had a very sideways London session, and the movement has sort of kicked in when the unemployment rate came out. So a little bit of downward movement in the euro. Pound not really done an awful lot. New Zealand flat. You know, it's just nothing moving today. It's just, that's it. It's dead. So it's not an awful lot really to talk about today. So yeah, RSIs and ADRs. We've had one which is Aussie New Zealand, which is basically a hit to the upside. It's just about got to ADR. It's only hit ADR basically on the back of that news event that we just had. So you've got an ADR upside on that one, but you know, we're just sitting around in this range for the last week, so nothing much happening on that one at all. That's it. I've got quite a few blanks on there. Why have I got blanks? Something going wrong with my charts today. Just reset that. There we go. So yeah, so there's no other ADRs to look at today. The weekly ranges this week you can forget about, because Monday screwed everything up. We had, excuse me, 300% ADR moves plus on virtually everything on Monday. So the entire weekly ranges were hit in 2 hours on Monday. Monthly ranges were hit by 175% of their monthly ranges within 2 hours. The whole market is screwed this week because of what happened on Monday. So there's no point in looking at weekly and monthly ranges at all at the moment. It's kind of a reset next week. Another ADR just got hit there, Euro odd. So Euro odd just hit ADR. So again, Euro is bearish, Australian dollar bullish. So you want to be selling it. So if you do take that, don't get too greedy on it. Look for maybe a pushback into propulsion. Probably better off waiting for the limit orders at yesterday's low to trigger and try and get in on a reversal down there. So if you wait for that one a little bit further, there's yesterday's low. US dollar Swiss has just hit ADR as well. Oh, my charts are screwed. I've reapplied my template and my charts are going a bit mad today. I was looking for where the daily line was and it wasn't drawn. It was drawn that way for some reason. So yeah, wait for it to get down to that level. You're more likely going to test that level and look for a reversal alert down at the lows there on that one. So, and US dollar Swiss has just hit ADR as well. There you go. There's the reaction on the US dollar to that move from the unemployment. So the market liking it. So yeah, potentially watch yesterday's high. I was going to look. Why is that drawn over there? Should be drawn there. Something very weird going on with my charts today. There we go. So that dotted line there, watch yesterday's high for limit order reaction back down into that area. So wait for a reversal alert on those. So those are your ADRs. Market's just opened. We'll look at the RSIs in a sec. Won't take long. There's not much to look at today. So NASDAQ, pre-market range will be taken. Same with the Dow, same with the S&P. So Dow looks like it wants to break long. No breaks yet. Not particularly exciting open, is it? I'm thinking about dropping the S&P from the portfolio for trading indices. Reason being is these two are obviously very heavily correlated. They work together all the time. They move together all the time. I've been noticing since I've been actively trading for the last sort of 3 or 4 weeks, excluding holiday. And it was the same yesterday. When we get hedged, we always get hedged usually on both. When there's a profit, there's usually a profit on both. So it's just doubling the risk up. There was a point where they became a lot less confluent and they were moving independently. But the S&P is so much slower. I've noticed when you get decent moves, which happen after the open, after a hedge. The NASDAQ yesterday got to my target and then retraced from the target and gave me a profit very, very quickly. The S&P took ages to do it. So when you get hedge situations, this one, we get very, very similar results on it. It just takes a lot longer to do everything. So I think I might drop the S&P. I might monitor it. Or what I might do is just reduce risk right down so we can monitor it, but not necessarily trade it financially. Because it's just, look at these two at the moment. It's the same thing, basically, happening, but a lot less volatility on it. So I'm still thinking about it, but I might get rid of it because it's much easier just to trade the two instruments anyway. Only two things to worry about then. Because when you get a hedge, if that one screams off the target and that one hedges, that one will hedge as well. So whereas if you got one hit and one hedge, the hit pays for the hedge and makes a profit. Whereas if you've got one hit and two hedges, the two hedges are usually more money than the profit, which makes it more difficult to make money intraday. When all three hit and go, it's fantastic. Obviously, we make an absolute killing, but it's just, I think, not worth the risk. I'm just waiting for this to do something. Look at this. We are inside bar on the pre-market opening range. We got 1.5 minutes until this candle closes, but there is absolutely no volume today. It's just not moving, is it? Okay, Dow's off. So long on a Dow. So watching that propulsion move, if that's going to be a new high double top and a low, we're looking for a pullback and then short. But it's very range bound at the moment, so it could go anywhere today, really. Okay, so Dow's taking off, or trying to take off. So target upside on the Dow, obviously. There's a long way to go if we're going to break this range of the week, come back up and sort of undo this move. So we have got quite a lot of upside potential today. If you look at it from a longer term perspective, we are still bullish at the moment. So potentially we are still in a bull market, but it's very difficult to tell what's going on with these markets at the minute. A lot of fear in the market. Okay, they all look like they want to try and push long. I'm just going to I'm just shutting the orders on the S&P. I don't want to trade both of those today. There's no volume. Worried about getting hedged today. There's not a lot of movement. This is either going to go or it's just going to it's done its volume off the news and it's just going to flip flop around. So I'm not going to trade the S&P. I'll trade the Nasdaq. Struggling. Afternoon, AZ. George, David, afternoon. How are you? Monkey Man, good afternoon. Cool. Right, so quick look at FX while we're waiting for this to do something. ADR wise, Euro Pound on the 4 hour is extended. So I've got one sell on that already at the moment. So there's your 4 hour RSI extension there. I'm going to adjust my templates here as well. So I'm concentrating on 4 hour RSI 80-20 at the moment rather than 70-30. I've got that set up to signal at 70-30. I might leave it as it is actually. But I might get rid of the 75-25 and switch this one over to RSI 10 just so I can monitor the two different RSI numbers. But yeah, nice extension. Looked at this one yesterday, Euro Pound. So very nice extension to the upside. We're looking for a mean reversion back into this area somewhere. Obviously, market is bearish. So we are bearish euro. We haven't made a new high. We've just made potentially a lower high here. So we're looking for a new lower low to go in. Euro is bearish. Pound is also bearish though. So it's a case of which one's going to come down the fastest. Aussie dollar Swiss has just hit ADR as well. So yeah, nice short opportunity there. I'm already in that one. We said about this one yesterday. I don't know if other people took it, but I said, you know, this was a really good entry. This was a good entry on Tuesday. Didn't go anywhere yesterday. So lovely hit straight up into the high of Monday. It's Tuesday's high, Wednesday's high. Wednesday didn't manage to break Tuesday's high. We literally just tapped into them. So this area here of exhaustion where they started selling, they've added. Looks like it's coming down. So looks good for shorts. Euro Pound, already in that one. It's not extended on the hourly anymore, but 4 hour nicely extended. Double divergence as well, rather flat. So looking good. And Pound CAD also extended to the downside. Long on this one. So took first long position on Wednesday, don't know. It's either Tuesday evening or yesterday, but got in yesterday, I think. Hasn't gone anywhere, so just sitting around waiting at the moment. We almost came down to get a second position on in this propulsion gap. So obviously this accumulation we had here, that is the move that broke it. So we broke that high, came back, retested that propulsion gap, added more volume. We're retesting and adding more volume again. So looking for price to push back up into this area, and then either it will go for new highs or more likely come down. So yeah, target on this one, just looking for it to come up just below the lower last week. And that's it on RSIs. There's nothing else. So hourlies, there's literally no RSI extensions. Everything is sitting somewhere between sort of 35 to 60. So there's nothing extended at all on the hourly charts. We're just sort of hovering around in the middle at the minute. And that's it for 4 hours. So there's your lot today. Aussie Swiss has hit. So we've got an ADR hit to the upside on Aussie Swiss. Again, we're coming up testing yesterday's high. So same as the rest, really. See if we get a reaction at the highs. Looks like the Swiss franc is weakened. Yeah, we've got weakness in the Swiss franc. They're piling out of some of the Swiss positions they've been getting into. So we're obviously in an extreme fear situation at the moment. They haven't updated it yet. This seems to be coming out at a funny time now, this fear and greed. We're not in extreme fear anymore. We were in extreme fear yesterday. We're back in fear now, so we're still scared. So obviously they've been piling into the Swiss, piling into the yen. So it looks like a little bit of money coming out of that Swiss franc now. So good opportunity potentially once we've hit ADR for mean reversion plays. You're going to get a propulsion gap formed there on the pound Swiss. Hasn't quite hit ADR yet, but Aussie Swiss, when this candle closes in 20 minutes, that is going to be a propulsion gap. So look for a reaction off back into that area there. 5-minute reversal, that's going to be tricky to get in on because it's just been bulls, nothing but bull movement for the last sort of half an hour. So hopefully you get a nice little bear candle, push up, and the limit orders will trigger there, giving you a reversal somewhere around there. You can play it back down. So there you go. That's it. Not a lot else really to look at today. DAX has gone short. S&P opening range is there. Your 5-minute candle after the opening range is another spinning top. Pretty much an inside bar on the opening range. It is an inside bar on the pre-market range. It's dead. Leave it. It's not doing anything today. So absolutely pointless trying to trade that thing today. It is not moving. So Dow, we're off to the upside. I'll leave target where it is for the minute. Stuck short. The danger for the NASDAQ, obviously, today is this propulsion gap. So obviously this is the unemployment claims. So if we do come and test this area, we know the market was buying that area. So there's a good chance that it might push back off of there. This is why I was a bit worried today about a hedge on this, because obviously the Dow's broken long. So that will pay for the hedge over there if it gets there. So I'm just going to leave those to play out for the minute. If anybody's 175 weekly range US dollar Swiss, doesn't mean anything this week, does it? Weekly ranges mean nothing. 125 US Swiss, so they're still selling the Swiss off. Big strong move on that Swiss franc. So we've broken yesterday's high, straight through it. Like, not interested at all. Really big move to the upside there. Afternoon, Mimo. Aussie talked about potentially increasing rates overnight again. Oh yeah, we didn't cover the overnight news, did we? Pound Swiss, ADR. There you go, some more Swiss franc. Be careful of this Swissy today. It's got such a long way to go. You know, this I said, this I said on Monday, you know, this is a lovely looking long for all these against the Swissies. I'm just not interested in the Swiss at the moment because the manipulation that's going on by Jordan. But that's got a load of room, sort of 250 ADR to the upside before you're meeting the monthly support. That's last month's low there, previous month's low. So we scream straight through that. So it's begging for a retest, that which will be a 50% retracement, pretty much, on that down leg. But you are fighting a weak pound. So Aussies, yeah. So we didn't cover the overnight news, did we? So that's yesterday's crude. So overnight, the reason I didn't cover it was because there wasn't really anything to talk about. Bit of Bank of Japan nonsense there again. Central bank will not hesitate to raise rates if necessary, which is what they said in the statement on Tuesday. Considered a rate hike on Tuesday. You always do. That's why you have an odd number of board members. They all vote on who's going to do what. So this is not. It was red news, but it was news that we'd already heard on Tuesday, which is why I said this morning when I was looking at the news, you know, everything that was said overnight by Bullock was said in the statement and the press conference on Tuesday. So we know all of this. We know they are looking to raise the rates. CPI is obviously not going where they want it to at the moment. So Aussie's sitting at 4.35. Where's all my inflation data gone? What's happened to the scorecard? Oh, where that went. So yeah, 4.35. Inflation is sitting at 3.8. It's far, far, far too high, and it's bouncing. So they've got room. Everyone else has got up to the fives or 4.5 in the case of the euro, but and the CAD was 4.75. But they didn't go as high on the rates as everybody else. They wanted to see if they could get it down without having to do that. Which helps with their unemployment, which has always been a trouble. But there's a good chance that will hike, which is why I said, on that on the is it euro odd we looked at, whichever one it was, Australian dollar is everything should be coming down against the Aussie because the Aussie is potentially going to be pushing. So yeah, more bullishness on the Aussie next week potentially and for the foreseeable. So Aussie New Zealand. This has been pulling back very, very nicely. So there's a good, I think you've had the reversal on the hourly go in there and it's retested it. I think this is potentially a good looking W pattern reversal for a new leg up. New Zealand, though, obviously they can increase their rates as well. Theirs is also not going particularly well. There's your 4-hour reversal alert. That literally is your retest candle there. So we retested the break. Yeah, we broke back above the break. So that is confirmed as your right hand leg. Off we go. So it looks good. Aussie's long. We'll see. If you've got any other pairs you want to look at, let me know. But I'm not planning on doing a full analysis today because I did it all yesterday. Okay, Nasdaq's breaking short. I'm just closing the Dow here. So out the Dow, 300. Reason I'm closing it, the other indices are breaking short and the Dow is running into resistance at propulsion. So this is the break from yesterday. We're retesting that break. Limit orders seem to be triggering. They seem to be adding more into that area. So just getting out of the Dow because it looks like that's about to turn tail. So short on the Nasdaq still. So NAS targets, obviously the first target is 3R to the downside. If we get that propulsion gap filled, I think there's a good chance we'll put another leg down in today. Let's have a quick look at the US dollar. What's it up to today? Yeah, fairly bullish US at the moment. So that's why the indices are coming down. So everything will be coming down against the US. Yeah, good chance these might drop today. Another leg down. Pound CAD. So yeah, pound CAD. I've just got the one long on at the moment from I think it was kind of overnight on yesterday. In there was the entry. So big extension. Excuse me. Always makes me tired when I've been staring at spreadsheets all day. So yeah, big strong push down. So looking for a pullback up into that double bottom. So that's the break. That is not a very good propulsion gap, but that is a propulsion move, obviously. But yeah, I mean, that's what I'm looking to test basically on the way back up. But the pound is bearish. So now it is, because the interest rates have changed. So we should start to see some weakness push in onto that pound now. So this is one of the reasons I've started this project with the fundamentals, to get all the data together. And I want to plot the data on a chart for the fundamentals and just see where, see what happens on the news events when there's big differentials on the news. So I want to see what the impact is intraday, what the impact is for the few days afterwards, and then what the impact is sort of mid-term, sort of 1 to 3 weeks after big news events happen, to give us some kind of idea on the sort of medium-term biases, because this market is so fundamentally driven at the moment. Like, I've gone back to 2013 with the data, so it's given me, you know, over 10 years worth of analysis. So I can do a post-COVID analysis, I can do a pre-COVID analysis. So what was it like before COVID? How did the news affect before? How has the news affected us since we've had COVID? How has the news been affecting us during the interest rate rally? How did it affect us during the interest rate pause? Now we're going into the interest rate decline. We should be able to sort of look for confluence in the past as to what is going on. What I want to do is use the sort of Monday sessions to sort of have a look at what's coming up this week, and what the forecasts are, and potentially what the outcome of those forecasts are. We know what happens. Obviously, if the PMIs go up, it makes it bullish. If the interest rates go up, makes it bullish. Yeah, so we know what the general outcomes are, but it's more a case of trying to plan what could happen intra-week and what we should be looking to get into long term. So trying to use fundamentals a little bit more in my trading, mainly because RSI, which is been my backbone for the last 5 or 6 years, in these sorts of market conditions where we're just getting these grindy moves, it's just not as useful. So you kind of got to adapt when the market changes. The market has changed very much in the last 6 months. We've seen an awful lot of different movement that we're not used to. There's that fib again. That was there yesterday. I deleted it. It's because I've refreshed my chart. Gone again. There we go. Let me just save the template again. Now I've cleaned it up properly. So there you go. That's pound CAD. So yeah, looking for pullback, and then should fundamentally we should get a continuation on it short. But that's really going to rely on what the US dollar does. And we obviously know the US change their mind every 5 minutes, as they always do. So just change some orders. Right. So typical. So I got out the Dow, and it's obviously now decided to rally. We are getting a little bit of buying pressure coming in on the NASDAQ. So this area here, obviously, is the propulsion move from the news. So I'm just going to get ready to jump ship on this today. Basically, I don't want to get into a hedge because we've got clean profit on the Dow. So if this does try and push up above the last 5 minute high, I'm going to get out. Not much point in trying to milk this today. Trouble with news before the open is you often get the market skewed, and it's just going to do that because it's done a massive amount of volume during the news. So it tends to be a little tricky after the news, as we know. Yeah, closing that. So out the NASDAQ. So they're buying up the propulsion. That was the wrong exit on the Dow. Never mind. Still banked 300 quid. So yeah, so it looks like a long today. So Dow absolutely screaming off. That US dollar is probably weakening now. Yeah, big strong pushback down on the US. You can't really tell against the Swiss. Euro US and pound US will be pushing. So big strong moves up on those. So yeah, we'll have to wait and see. This could just be part of a whipsaw today, though, so be very careful. Horrible trading after news. So that's about it for today. Euro pound I can close out. That's worth watching. Euro pound. We just about hit ADR. Oh, close. Euro pound ADR. So that is also yesterday's low there as well. So be aware we're going to get limit orders potentially triggering here to drive this back up. Might jump ship on this. It's got such a long way to go, though. Look, this is all dead air here. If we break this low today, we should be able to get 125 ADR. If we can break that 125 ADR today or tomorrow and hold around here, we're going to come back down here. Tricky. Just exited EuroCAD. Good man. Well done. Euro's dropping. Yeah, so that's a lovely move. A-shaped recovery on the EuroCAD as well now. So all these moves on Monday that I said about being A-shaped recoveries, half of them did it within 24 hours. The rest of them now are pretty much back to origin. So this was just a complete knee-jerk reaction. As I said, all these moves that we saw on Monday were totally the wrong way. Fundamentals. There was absolutely no reason for that. That is what that's doing. So yeah, it's just unfortunate. A lot of people got hurt on that. Nothing you do about it. Market does what the market does. It was fundamentally wrong. It knew it was wrong. I knew it would undo it. It's just a case of it went way further on Monday than we anticipated it. And from Friday, Friday, Monday was just absolute bloodbath. Always does it. I'm sure it can do more profit on the way down, but I find it hard to watch profit and not take it. Yeah, there's a solution to that, easy. Shut your charts. Go out, walk the dog, go to the pub, go and play squash, go and do something else for 2 hours, come back, and you'll have double the amount of profit you had when you left. And if you haven't, shut your charts again and have a look at them tomorrow morning. Or switch up to a 4-hour chart and don't look at your P&L. Hide your P&L away. If you're not looking at it, look at it from an analysis perspective, yeah? Look at my euro pound. Yeah, my target is there. The reason my target is there is for 2 reasons. It's the bottom of that propulsion move, and it is the high there, which is the open of last month. As we've broken out that high, I think the market will have limit orders at the highs of the month to rebuy them. So my target is above that level. Yeah, very likely that will get hit. I'm sitting in $600 and something of profit now, because I know that because I looked at my P&L. If I didn't look at my P&L, that trade analysis hasn't changed. If you look at your P&L, it's going to make you take the money. There's nothing wrong with that because you got money, but you'll never hold positions if you're doing that. And always switch up to, you'll see me most of the time in the live rooms, I'm sitting on the 4-hour time frame because I'm looking at the big picture. Where's this going? Yeah, it's a beautiful high resistance, M pattern or triple M pattern reversal after a massive propulsion move, which wasn't real and is highly likely to become an A-shaped recovery. Yeah, you should be holding this if you're in it really long. There's nothing wrong with holding it for 50% retracement or even a 71% retracement on that. But money's money. You need to take it. This is why it's so difficult trading, because there is no right and wrong. I have no idea. This could hit the low of yesterday, as it's doing right now, at ADR and bounce all the way back up. And tomorrow it could be like 150 ADR to the upside. It could be 150 ADR further to the downside tomorrow. I don't know. You just take what you take. There's no way of targeting successfully. This year's been difficult. Yeah, very difficult. A horrible year so far. Markets have just been horrible this year. It's just been different this year. It's been a very odd year. Just broken yesterday's low. Okay, so the hourly candle's closed. We just broke the lows, so we could get a propulsion move here. We'll see. But do you often find that even when you place a TP in a good place, they will you still manually close it earlier? Yeah. When you're getting close to, TP orders in the market are orders in the market. I place orders in the market so that if I'm not watching the charts and it gets to where I thought it was going to get to, it takes the price, it takes the money for me. That's it. If this thing pushes down to 125 ADR today, yeah, and I see that go in, I'm closing it. Because price actions told me that the limit orders from the previous day's low have just triggered, and there's a high probability we're going to pull back. Now, we may well pull back into that propulsion gap and resell back down into here. I don't know that, but what I do know is I've got, by the time we get there, roughly $1,000 on the table, which will turn into roughly $850. I'd rather just take the $850 and spend it than hope it does that and go through the pain of sitting there tomorrow at break even, Monday coming back down to retest the low of today, and then potentially bouncing again and then going back down to there for Wednesday, Thursday next week. I could either take 850 there or 1250 there, but I'd sit through another week's worth of pain. I could get into another trade. Yeah. So you've got to look at it in that respect. You can't spend an open P&L. You can spend a closed P&L. However, if this is bearish, as it is now, I'm expecting this to test this level. So I'm at least going to give it a chance to do that. But in the next hour, if it hits that and bounces off, I'm out. If I'm here and I'm watching the charts, if I'm at my class at 5 o'clock, I won't be doing that. But what I might do is stick a trailer on it. Let's do that. Easiest thing doing it. Locked in. Can't lose. Okay, so it's either going to scream down and test that level, and I'm going to get out when it bounces 50, or it might scream down into that area. But I can't lose. It'll do what it does. Market gets me out when the market gets me out. I don't know. There you go. Good decision on the Dow. It was the right decision to cancel the S&P today as well. It was the wrong decision. So there's target hit. So target on the Dow was 3R, which is here. So shouldn't have interfered today, but that candle was definitely bearish. So I don't have any problem taking that off there. Lovely Dow Rip North, yeah. So we're just coming up to ADR on the Dow. Coming up to ADR on the S&P as well. And we're approaching, not a very good propulsion gap, but part of that sell there, fastest part. What you also can do is close 80 to 90% and set break even. What's the point in that? Might as well close 100% and not have to worry about it. That extra 10 to 20% that I let run is going to be such a minuscule amount of money. It's just not worth it. It's like, you know, a lot of courses and systems will tell you to close half the position, take half, and let the other half run. What happens is you take half the profit, the other half breaks even. So you lose 50% of the profit you would have had. I spent, I'd probably say 2 or 3 years taking partial profits before I realized it's the worst possible thing you can do, because partial profit is removing half of your profit. So it's a partial profit. Yeah, you would have made 100%. What you end up with is 50. The amount of times it actually goes beyond your TP where you got out without half and makes you more than you would have made if you'd have just closed the whole thing there. Don't forget, if you take a partial, yeah, say this moves up to here. If I'd have taken 50% off there and it moves up that far on the other 50%, it's going to be equivalent to what I would have made if I'd have closed the whole lot there. To actually get to the point where if I close the whole lot there, it would have to go much further on that half size position. It's got to go twice as far on a half size position to make me the same amount of money. But what 90% of the time happens is when you close that, it goes up to there, you don't close it, and it comes back to there, and you close it out where you would have got out originally. Or if you'd have moved it to break even, you actually get nothing. Doesn't work. I have tested that with models to infinity, tested it to death. Doesn't work. Get in, get out. Add, no problem adding, yeah? So if you get to that point, go to break even and add more size, yes, do that. But then what will happen is it will come down and stop you out on that one, and that one will be in drawdown. There's no easy way of doing it. Regardless of whether it's profit or DD, holding is painful, yeah. Holding is painful. It's fear. Yeah. If you are comfortable in a trade, you haven't got enough on. If you're uncomfortable in a trade, you've got too much on. There is no middle ground. Yeah. You have when you in this trade is a good example. I've put that trailing stop on there. I have no fear. I do have fear. The fear is that it's going to stop me out, and I'm going to go, oh. But if it goes like that, I'll be like, that was brilliant. So my emotion is controlled by whether or not that dotted line there gets hit. It's either going to be a good result because it does that, or it's going to be a bad result because it does that. Yeah, if it pushes up into that propulsion gap and then screams down to my target, it's a bad result. There's no, this is the thing with psychology, and this is why I trade the way I trade as a position trader, because psychology is not fixable. I don't care how many books you read or how many courses you do on trader psychology, you cannot change your human instinct. And your human instinct is, holy crap, there's $1,000 on the table. I need that to pay the bills. I know it's going to go to $3,000, but I need the $1,000. Can't change that. Just take the money. Change your mindset to sitting in drawdown rather than and the other way around. Taking partial profits does work on ORB though. Not in my testing, but if you can make it work, go for it. But test it over 10 years, test it over a decade, then come and tell me if it works. 2 positions, yeah, that's 2 positions though. That's not partial profit. That's taking 2 positions. It's a different thing, as you could say, could call it that. But look, I mean, look at this one today. Here, I took both trades off there, not one. Why did I take 2 trades off there? Because I wanted the money. In this particular case, it would have worked to leave the second position running. If it had pushed back to there, it wouldn't have. There's no right or wrong. It's just long term. Just take money. Money's important. You need it. Being satisfied with your exits. Yeah. There's an argument for not using any kind of trade management software at all to look at your positions. If you get into a trade, the old saying, plan your trade and trade your plan, is absolutely true. You should be doing that. My plan on this trade was that this was exhausted and I was going to go short on it. And I was looking to enter a second position if we broke that high. We didn't break that high, so my plan is intact. I was expecting that to be the peak formation high and for it to hold and for it to break down. My plan is working. I am still changing my mind on it because it's taking 1, 2, 3 days and it's gone nowhere. I was expecting it to come down very, very quick and it hasn't. So my plan is now, I don't think the trade is necessarily going to work. It might do, it might not. But my plan has changed since I got into the trade because it's taking too long to play out. And again, these are things you can't test. It's experience that tells you these things, but experience will also tell me that I might be wrong on it. There's a 50-50 shot. It's either going down or up, isn't it? But you can't know what it's going to do. But you know, there's a good chance it will. Come back and look at the stream next week, Monday, Tuesday, Wednesday, maybe. I would not be at all surprised if we're sitting here. Yeah. Because the euro is bearish. The pound is also bearish, but the pound has just had a drop on interest rates, so therefore it will have a bounce before it has its next drop. The pound is going to drop because it's had its bounce. So the pound is going to get weaker. The euro is going to get weaker, and the pound is likely to strengthen intermittently before it drops again, which means that there's a good chance this will come all the way back down here. Don't forget our friends, the propulsion gaps. Yeah, market moves from propulsion to propulsion. There's a lot of targets to the downside. Trading psychology is the hardest part, yeah. It's impossible. This was what the position trading bootcamp fixes. It fixes your psychology, not by reprogramming you, by explaining that you can't reprogram you. Yeah. You can go and get hypnotized. Maybe that would work. I don't know. Don't know how many traders have been hypnotized to stop them taking profit too early, but be interesting to see. When I close 90% in profit and set the rest to break even, it's not painful, and I have an extra 10% chance to book more profits. You have an extra 10%. Yeah. Right. So that 10% that you've left on the table, all right, let's say I take off 90% of it here and move 10% to break even. If it pushes down to that target, it's going to be virtually no money. If this gets to there, it's worth... Let's do it. Let's do it. All right. Let's do it. Let's do it for fun. That's worth $1,250. I'm going to close out. What if I close out? 1.4? 1.5? Big quarter of a... let's close at 1.5. Banked. Ta-da! Locked in. Let's cancel the trailing stop. Right. So if this pushes down now, it's worth $160. $160. I could be sitting in this now for an entire week, not taking any more trades, not looking at any more exposure on the euro pound and all that sort of stuff. I mean, I can do because it's obviously locked in at break even, but that's worth $160 to me. Just not worth bothering with, is it? I don't know. It seems pointless to me. Right now, I can just bank 100, right? So I can bank $100 now or hold it for potentially 2, 3, 4 to 5 days and try and get another $50 out of it. I don't know. To me, it just seems pointless. I don't know. Maybe it's just me. Trying to tune up my charts. Charts reading. DAX on H1 bullish. DAX. Trying to tune up my chart reading. DAX on H1 is bullish. That's an open question. It depends what you're looking at, doesn't it? Right, it's lower than yesterday's high, which is bearish. It's higher than the open, which is bullish. It's been coming down very hard and it's pulling back. And if you believe in flag breaks, it's bearish. But if you believe in support and resistance retests, it's bullish. The last 3 hours have been bullish. But if it's going to make a new higher low, lower high in market structure, it's bearish. There's a million ways to read a chart. Chart reading is completely discretionary and down to the individual. There's no two people that will look at the same chart in the same way, which is why the market moves up and down, because somebody will be looking at this going, that's really bearish. I'll be looking at it going, that's really bullish. And we'll basically go, well, you want to sell it? I'll buy it from you. One of us is going to make money. The last 4 hours are higher lows and higher highs, which is bullish. If this paints an inside bar next, some people see that as a bullish continuation. Some people see that as a bearish reversal. It's the same candlestick on the same time frame. Two different people will have two different opinions on it. Good example, right? This candlestick here. You can't even see that wick, can you, on the screen? Let me just find another candlestick. There you go. This is a perfect example. Look. Right. I closed out here on the Dow. Yeah. Why did I close out there on the Dow? Because it was pushing up and I was expecting it to retrace, and I got a candle that looks like that. Yeah. Big long wick. Most people call that a shooting star. Yeah. Tom Hurgard classes that as a bearish signal, a bullish signal, because if price moves up and pulls back, he expects that the buyers to be able to take control of the market that they just lost and continue to push. I see that as a bearish signal. Show me 100 instances of that candlestick and I'll show you 50 of them that do that, what they've done today, and I'll show you 50 of them that do that and go the other way. Both reading exactly the same candlestick, exactly the same pattern, but having a completely different opinion on it. Yeah. Every time he's right, he'll go, I was right. See, it does work. And every time it doesn't work, I'll go, I'm right. You're wrong. Who's right? Who's wrong? The person that makes money is the person that's right. That's where it comes down to money management, isn't it? And risk management. So everyone will read it in a different way. I don't know, it is what it is to you. I've tested, you've got the, look at the price action toolkit. Yeah. If you want to go and test price action and read price action, bare naked charts, candlestick patterns. Yeah. Price action toolkit is a fantastic tool to use. Don't have to buy it. Go and download it for free from the marketplace and use it in the strategy tester. Play with it. It draws candlestick patterns for you. Yeah, it draws strong close candles, bullish engulfing, bearish engulfing, hammers, shooting stars, long wick candles as they're called in this, long wicks. Yeah. Go and play with it. Every time you get a long wick like that, buy it. See how many times it works. It'll be roughly 50% of the time it'll work, because that's what the market does. Every time it's painted a candlestick on a time frame, that candlestick is finished. The next candlestick is 100% brand new price action and order flow. Nothing to do with this. Sometimes it works, sometimes it doesn't. You can test that theory yourself. Just go and do it. Still going. Shouldn't have closed out 90%. I'd have been even more profit now. Who told me to close 90% of that trade? I would have made more money if I didn't listen to you. Uh, my copying mechanism is saying we don't know what the next tick is going to be, so take the money when you can. Yeah. Coping mechanism, yeah. This is what I say in the boot camp, yeah. When you look at your P&L, there's no right or wrong amount of money here. The right and the wrong amount of money is the right and the wrong amount of money for you. So if you have had, and this is what I teach in the boot camp exactly, if your P&L is right for you to take it. Yeah. If you have had one of those weeks or one of those months where everything has just fallen into place and everything works, you are banking day after day, 0.5%, week after week, 2.5%, 3%, 4%, whatever. And it's the last week of the month and your P&L's green and everything's in a little bit of profit and you close it all out. That is exactly what you should be doing, because all of that could turn red in one news event. Yeah. If you've had the worst week of your life and you have been in massive drawdown, you've taken a 6 to 10% loss, you're sitting in 15% of drawdown, but you've got big lot size on and that thing is just starting to turn around and it's got to break even, your decision is your decision. That is either going to be a break even, get out and go, what a week, I don't want to experience that again, or it's going to drop for the next 3 hours and it's going to get back every penny you've made. No one can tell you what's going to happen. But the P&L is the P&L. There is no decision-making process that anyone can make for you but you. You have to take the money, which is why we are trying to shift our mindset into your account is used for drawdown, for making money. It's not used for going into loss. It's used for making money. Yeah, the amount of money you make is completely variable. People have said to me, you know, on strategies, how are you having such a bad month? I'm having a fantastic month. And I've had the opposite. I'm having a flyer and everyone else is like, I'm having a nightmare. Trading the same things as you. Why is it going wrong? Because I'm taking profit at different places. You're holding things I wouldn't hold. I'm holding things that you wouldn't hold. Yeah. We can use the same EA and it can take exactly the same trades and do the same thing, but the EA doesn't know what to do. The EA knows how to execute orders. It's a dumb machine. You've got to make the decisions, and that's where your experience comes in. There's no way of making something full automation work long term. Just can't be done. Well, I've not found it anyway. Somebody left a review the other day on the, I think it was on the Market Reverse Alerts EA, on the Position Trader EA, basically slagging me off because I'd asked them to watch the boot camp. So his response was something along the lines of, all the author's going to do is be arrogant and direct you off to learn about the product, learn about the EA and learn what it does, and watch a massive long boot camp rather than just giving you a set file that makes money. That is a prime example of the type of person that shouldn't be buying EAs. If you haven't got the time to invest in your education, you're never going to make it as a trader. There's no point in just going out and buying EAs, is there? What's the point? It's not going to work. Understand what you mean when you say let the whole lot size run, but you have booked profit. Yeah. But my lot size is now 10% of what it would be. So if this now drops like this, yeah, I'm only going to make that much money on 10% of the original risk that I had. I'd much rather have it all there or all there. I'm looking at this now, right? I'm thinking now that I've got this stupid thing. It's either going to make me no money or $160. I just made $325 on the Dow in 5 minutes. This is going to make me $160 or nothing at some point over the next 24 to 48 hours. I've got to babysit this thing now for probably 2 days to make what I'd normally go and spend in a restaurant. It's just, to me, it's no point in closing partials. Trail it by all means. And if the market wants to go crazy, let it trail you or get out and move on. You always said in the streams, you can't predict the market, take the money. I trade 5 years with this strategy and it works, yeah. Yes, lots of people do. Everybody does different things. Do what makes you happy. It doesn't matter. There's no right or wrong. I agree. So much 50-50. The risk reward gives you the edge. Yeah. it's being right that gives you the edge. You can't be right with one position and a stop loss and a take profit, because there's nothing that will conform to any normal structure that will allow you that to happen most of the time. So, but does it draw John Wick candles? No, it doesn't draw John Wick candles. I haven't got one of those, unfortunately. We need a John Wick collab with the Turkish guy from the Olympics. I'm pretty sure that there are memes all over Facebook with that Turkish guy. He's been. I swear, did I see the other day? God, what was it? Pulp Fiction. Fiction. Turkish Olympian. I'm pretty sure it will come up. He's everywhere. How cool is he? It's just brilliant, isn't it? I love him. Hitman. There's just so many memes of him. Look, she's doing the same as well. It must be a Turkish thing. It must be the way that they shoot people in Turkey. I don't know. He's a one-shot killer. Maybe ICT should employ him. If you're looking at fib retracements on the euro odd, would you include the giant wick? Yeah. What, for a long or a short? I mean, that is what I would class as the pullback for a long. If you're going long, how? I don't. It doesn't make sense. But yeah, I mean, again, this is the discretionary part of trading. I have learned from two people in the past. One was using candle bodies, so they would draw from there to there. I think the vast majority of people include the wick, yeah, because this is part of price movement. This, you can't just say, "Oh, that didn't happen." That's very important. There's a hell of a lot of buyers in there, and there are no sellers. That's a very important part of price action. That's telling you that price is exhausted. So it is part of the action. But this is why fibs are random. Yeah. So, you know, if you're going to be a fib trader and you're trying to pick a pullback on that move, I would place an order there, 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 and at 100%. Yeah. If that works, fantastic. If that works, fantastic. If that works, fantastic. If that works, fantastic. If it doesn't work and it's a A-shaped recovery that does that, you lost. But there is no way of drawing anything on this chart that is going to give you the accurate entry. Sometimes it pulls back to 50. Sometimes it pulls back to 61.8. This time it pulled back to somewhere in between the two. It didn't conform to any level whatsoever. Yeah. It's rough. This is why I say, if you can get a fib level to conform to a propulsion gap, that kind of often will become a self-fulfilling prophecy, or a support resistance line. Yeah, so that monthly high, it bounced ever so small from that. It didn't quite hit it to the pip, but bounced a little bit from there. But I would always use wicks. You know, again, this is why I was, you know, talking the other day or yesterday, whenever it was, about trend lines. Yeah. Some people will draw trend lines from wick to wick. Yeah. Look at the trend line junkies that bought that. Whoops, you're dead. You know, some people will have drawn it from there. Whoops. Yeah, some people might be drawing it from there. Depends where you're looking on your chart, doesn't it? Depends on your zoom level. Everything that you draw on your chart is discretionary. Yeah. And this is the problem with trend lines. People go, "Oh, that doesn't quite work. That works, but that works better. That works better. Yeah, that works better. Oh, it failed again. I'll tell you what, let's do that. There you go. That's probably what we want, isn't it? So we'll wait for it to bounce on. Oh, I've moved it. We'll wait for it to bounce off of that line again in the future. Yeah. But why not? Why not from there? Yeah. All valid. Absolutely valid. Some people don't care if it's gone through it a little bit. Still valid. Brilliant buy spot. You watch this bounce from here. Why will it bounce? Because it's hit 125% of its average daily range and it's putting in a new higher low in market structure long. Nothing to do with the line I just drew. It happens to coincide with it. But I've just drawn 7 different variations of it on this chart. None of them are going to make any sense. It's all a load of rubbish. There's people selling courses on trend lines, and you can make them work. Don't get me wrong. But they're not working because of the trend line. They're working because of market structure. They're working more because of fib than they are because of market structure. When you draw a trend line, it's usually going in one direction or the other, isn't it? It's going up. So when you draw a trend line up and the market goes up and it pulls back into that trend line, it's not bouncing because of the trend line. It's bouncing because you've got a low, a high, a higher low, a higher high, a higher low. It's market structure. It's weight of orders in one direction. It's a trend. Yeah. Line could be there, line could be there. The market will bounce somewhere on a pullback on the previous move. Yeah, so they work for you, though. Use them, you know, like everybody's got a different way of trading. It's just the market doesn't move because of a line on a chart. The market moves because of the weight of orders of banks. That's it. I'm waffling. There's nothing much else to talk about today. That's probably why. So NASDAQ, we are ADR, Dow, ADR, bounced off of ADR as well. Nice bounce at ADR there. So potential push back on that. Big, strong move. There's nothing else setting up for me today at the moment at all. There's quite a few ADR hits though. So there's opportunities for ADR reversals today. US dollar Swiss, it's already played out. Look. Haven't had a reversal on it yet, but there you go. 3-bar reversal, push, pause, pull. So break of that low, you could take instead of the reversal alert, and that would probably give you a similar M pattern reversal. So watch for that starting to show signs of weakness. Euro odd also. Reversal alert's going to trigger on that now. That's 125 ADR. Just had a nice big wick put in there. They've sold into it. They're rebuying that low. So if you get a reversal there, that is your W. So it'd be a nice tight reversal alert on that one. Push up into that propulsion gap. So again, high, low, lower high, lower low, lower high. Definitely bearish euro odd. There we go. So that's all I've got for you today. Anything else you need, let me know. I'll be in Telegram or Discord. Back tomorrow. I'm working a lot on the hedging strategy at the moment. I am getting to a point in that hedging strategy, like I did before, where I'm starting to pull my hair out, and there is very little advantage in hedging over position trading. So I'm trying to create an edge with hedging that is better than position trading or different to position trading. And I'm finding that it's just pointless. It's not helping because what I'm ending up doing with most hedged positions is, as the problem with hedging always is, you end up with a hedge which is too wide and you end up not being able to get out of it, which is no different to having to close that down and go, screw it, I'm taking the loss on that hedge because I couldn't hedge out of it. And it's no different to taking losses in position trading when you get a squeeze that goes too far and closing out portions of your position. It's the same thing. So I've got to the point in that strategy where I've created an EA for back testing, and it's very, very, very good, but it's not any better than what I'm doing at the moment. And the guy that's introduced me to the strategy, you know, he's kind of his version of position trading, if you like, as a strategy. So it doesn't really add anything to my portfolio. So I'm getting to the point where I might drop that. But I've also started working. Somebody mentioned to me the other day about an ADR breakout strategy, which I've started to look into, and I've adapted the position trader. In fact, I've got it here. I can show you quickly before I go. So this is version 1.6 of the position trader EA. And I've got a new thing in there now called ADR breakout strategy. And it probably doesn't take a rocket scientist to figure out what it's doing. But instead of going short on an ADR hit to the upside, it goes long. Clever, eh? So it basically takes ADR breakouts. So where did that take a trade? Oh yeah, there you go. So ADR breakout short. So we had an ADR hit to the downside. So instead of going long and playing the reversal, which obviously worked because we know that happens a lot of the time, you go short. And what you're looking for here on an ADR breakout is a strong move to the downside, and then you're looking for that market structure pullback. So you get in and you scale into the pullback, and obviously expected to go short. The opposite to the extension. So it's basically, this is ADR reversals and mean reversion. ADR breakouts are obviously breakouts. So it's a different strategy. It's just a reverse. It's a flip of the original strategy. So I've just built this into the EA to test it today. I'm having mixed results, to be honest, although I haven't tested it to death. So this is something I'm going to look into as an option for adding into the position trader EA. So you can trade breakout strategies with it as well. So basically using ADR to trade breakout strategy, but in a position trading methodology. Yeah. So it does fairly well. There you go. Got out of the short, and now it's got a long on. It's taking some losses. Again, I've no idea what the settings are, good settings or bad settings are for any of this. So I've no idea what this is doing. But yeah, so it's the same sort of thing. But I'm finding you're better off doing RSI reversals than you are RSI breakouts. ADR reversals than you are ADR breakouts. Personally. The whole purpose of ADR is to tell us when something is extended and mean reverting. But sometimes it does go the other way. So yeah, I'm throwing a lot of time at the moment into the fundamental research that I'm doing at the moment. So I may well scrap the thingy. Brian's got a new John Wick on a horse. That's not bad. I'm trying to find something wrong with it, Brian. Yusef Dilek and John Wick at the Olympics. Yes. That horse's leg shouldn't be like that, should it? I'd say it's not done a bad job with the horse, though, is it? Poor thing's got a bit of a. He must need the toilet or something. That's not bad though. Look, we're having problems with feet as well. John Wick's foot is cut in half by the stirrup. So not only is it having problems with hands, it looks like it's got a bit of a foot problem. Not bad though. That's a different one. Right, I'm going to leave it there. Anything else you need, let me know. Aussie dollar CAD's 125 ADR now. Some more extensions on this Aussie CAD move as well. Again, getting out the highs, look. So just watch these for reversals today. Likely to get exhausted up here and want to pull back if it does put another leg into the upside. But Aussie is long, bullish. Yeah. So be careful if you're mean reverting Aussie because it will want to go long. Better off waiting for a pullback. If you get an ADR hit to the downside into that or into that, that'll be a much better trade. All right, so anything else you need, let me know. Otherwise, I'll be back tomorrow morning at 7:45. We'll be trading the DAX tomorrow morning. See how we go there. But yeah, hopefully you have a good day. Anything else you need, let me know. Otherwise, I'll see you next time.